much.
Adam.
All right, has the
After
value...
he works 14 hours.
What's that?
After he works a 14-hour day. I'll take care of him after that.
Shapiro.
Yeah.
All of them. Edson, Flock, Shapiro, they're all hardworking guys. All right, has the value of your 401k dropped so much that it's now more like a 201k? I can't believe I just read that. Old joke.
It's funny.
Is it? How about a 0-1k? I'm going to go with the 0-1k. All right. Look, if you've looked at your 401k lately, it's not so funny. For most of us, it's not a joking matter. Joining us with some advice, Ken Bock, a certified financial planner for Sterling Oaks Financial Services. Mr. Bock, let me ask you quickly. A lot of people say, hey, with the market kind of falling over, should I stop adding to my 401k on a regular basis the way I have for the last, I don't know, year and a half, this big downturn? What would you say?
Yeah. I get that question all the time. If you have more than 7 years to invest, or if you're a young investor, everything is on sale. This is a great time to buy low. So I tell people, if you can contribute, continue to contribute, do so, because at some point in the future when the market recovers, all those dollars will be worth a whole lot more. So I say yes.
You know, one of the things that's kind of a scary trend, I think, for employees, but it seems like a sign of the times, is companies are cutting back. They're cutting back on matching. They're axing the 401k programs overall. Yeah. I mean, because they're trying to stay in business. You know, a lot of people are scared about that, Ken.
Well, right. In the companies that I deal with, a lot of the employers are asking, how can I save costs? They don't want to eliminate the 401k plan, so they're reducing the matching, as you said. But one thing they can do to help save money is they can look at the expenses of the plan to see if they can reduce the overall cost. For example, if the average participant balance is $20,000 to $40,000, a lot of providers will discount or waive the fees for the 401k plan. So it's a good idea to start talking to the providers and see how can we reduce the cost of the plan.
Ken, I get a lot of questions from a lot of my clients saying, well, you know, I have a majority of my money in a 401k, which a lot of Americans do, and they want to try to time the market because they see the market down 50% from the highs. What type of advice do you give to a client who comes to you and says, can I use my 401k to time the market and get in and out from large cap, small cap, international to try to play this?
Right. I'm not a big advocate of timing the market. You know, 401k is about dollar cost averaging, putting a little bit of your paycheck in each paycheck period. So what I would advise them to do is go back to the education aspect of their 401k plan, go online to the questionnaires, and find out what the risk tolerance is and follow the advice of the plan as to how to allocate. But as far as timing goes, I'm sure a lot of investors would say they're not very good at it.
But you know, at the same time, I have to kind of go back to the lows that we're seeing on the markets. And a 401k plan, Ken, is a long-term plan. And this could be a good time to get a little more aggressive in your 401k, because you got to admit, most company 401ks are pretty tame.
Well, in every 401k plan, there's a range of options available from very, very safe to extremely aggressive. Most people don't look at all of those as an opportunity. As far as being more aggressive, you know, I ask people what lets them sleep at night. You know, intellectually, we know that we can go more aggressive and buy low and it'll be worth more later. But emotionally, a lot of people are shell-shocked and they don't want to do that. So it's a tough call. People have to do what makes them feel right.
You know, what's dangerous about 401ks, it's like investing on autopilot, and people get, this is going to be corny, but pension deficit disorder. They just forget about it and set it aside. But when you talk about these asset categories as risky to riskless, look at, I don't think diversification is the way to go. You should be value investors. I looked at my 401k. Fidelity was putting me in so-called safe categories that were investing in emerging markets. I mean, they can call it what they want, but you really got to look at the investments underlying them. There's a lot of danger there. Isn't that, wouldn't you agree or no?
Well, there can be danger, but it goes to the fact that employees should not be complacent about their 401k. They should rebalance it at least semi-annually. They should read the prospectuses or at least do the questionnaires to help understand where their risk tolerance is. So while there can be some danger, that only happens when you don't pay attention. And I think people are paying more attention now than they were before.
All right, Ken Bock, thanks a lot. Sterling Investments, right?
Thanks, Ken.
That's right.
Well, they are not playing at the Toy Fair this year. The economy on the minds of sellers and buyers. We're going to take you to the Toy Fair next as Fox Business remains open.
I want you